Welcome back, traders. I hope all of you guys had a wonderful weekend and are ready to come back and trade with us once again. So, I do have a few setups I would like to share with you guys, starting off with GBP JPY. So, I am on the weekly time frame, and my analysis on this is very similar to last week's in the sense where we are still looking for this big push to occur, this big impulsive move to follow the overall downtrend market structure. Now, regarding last week's candlestick, you guys can see we formed this candlestick right here, and it is a bearish candlestick, even though it might look like a doji, just because of the fact that we have this huge wick being thrown to the upside, and this wick is important because it shows us that this consolidation box is not ready to break yet. Also, this level of resistance at 144.080 is holding firmly for GBP JPY, and we should see price continue to push back towards the downside, first reaching 142.5 and then reaching the bottom of this consolidation area, and who knows, we might even break this consolidation area this week and continue to push down even further. But before we get to the whole breaking of the consolidation box, we have to first trade what we see. And as you guys can see on the Friday daily closure, we formed this huge rejection off of the top of this consolidation box and 144.080. Now, I do hold a bearish bias because obviously we just rejected at the top here, so we should be aiming at the bottom of this consolidation box as our overall take profit. I do hold a bearish bias, but before we can actually enter this position, I would like to see price come up and retest this broken level of support. So let me just draw this on real quick. I would like price to come up, retest this level of support, and then continue to push back towards the downside. However, because of this immense bearish pressure that we have, there is a possibility that we might not even come up for the retest. Instead, we will probably just come back down to this level of support. And if this occurs, then we will simply be looking for a break or bounce scenario. Obviously, we would be more interested in a break because we do have a bearish bias. So once price reaches this level, we would be looking for a break, retest, and then a continuation back towards the bottom of the consolidation box. So simply put, we are looking for two scenarios. Scenario number one is price comes up for the retest, and then we see it come back down. Scenario number two is price breaks 142.5. We have this retest, and then we look for a short opportunity back towards the downside. Now for scenario number one, we do have a nice short opportunity, as we would be looking for a potential gain of around 220 pips, which is a nice amount, and would only really be risking around 35 to 40 pips. So the risk reward on this is very good. We'd be risking 40 pips for a potential gain of 220 with a risk reward of 1 to 5.5, meaning for every dollar we're willing to risk, we're potentially going to make back $5.50. Now for scenario number two, our entry position would be over here, and our stop loss would just be again around 40 to 30 pips. And this right here is also a nice risk reward ratio, as we are still maintaining above the 1 to 3 minimum requirement of that risk reward. So 3.30. So we'd be looking for a potential gain of around 135 pips for a risk of around 40 pips. So it's a pretty good risk reward here as well. And obviously I would like scenario number one to play out, but we'll just have to see and wait for the daily closure.